So Nokia's stock just went on an absolutely wild ride, surging in a way that left a lot of people scratching their heads. What in the world just happened? Well, we're going to break down the technical analysis to see exactly what drove this crazy surge and, maybe more importantly, where it could be headed next. Okay, so the action really kicked off on October 28th. The stock just rockets to a new high of $7.77. It was a price that kind of came out of nowhere and really caught everyone off guard. And how did it get there? Get this, in a single day, it jumped over 22%. You know, a move that dramatic doesn't just happen. Something big is going on under the hood, and it really demands a closer look. Which, of course, brings us to the big questions, right? What forces are actually behind this incredible move? And what is the data telling us about what might be coming around the corner? First things first, let's just get a sense of the sheer scale of this thing. You know, analysts are calling it a parabolic rally, and trust me, they're not exaggerating. Look, a price move this huge needs some serious fuel. And in this case, that fuel was an absolute explosion in trading volume. On that one day, nearly 378 million shares changed hands. This was not a quiet little drift upwards. No. This was a stampede. All right, so with that incredible volume as our backdrop, let's start decoding the momentum here. We're going to dig into the technical indicators to see just how powerful this bullish signal really was. We're going to start with something called the Average Directional Index, or ADX. Now, think of it like this. It's like a power gauge on an engine. It doesn't tell you if you're going forward or backward, but it tells you how much horsepower is behind the move. Anything over 25 usually means you've got a really strong, powerful trend on your hands. So what was Nokia's ADX? A massive 54.40. Let me be clear, this isn't just a strong trend, it is exceptionally powerful. The engine behind this rally is absolutely running at full throttle. And it's not just the ADX either. I mean, all the other indicators are flashing bright green. The Arun oscillator, it's at its maximum reading, 100. The price is just soaring above all its recent averages. And the on-balance volume, well, that confirms that big money was flowing in, not out. All signs are pointing to an incredibly powerful bull run. But here's where the story takes a really sharp turn. Just when everything looks perfectly bullish, the data starts screaming some pretty serious warning signs. It looks like this rally might be flying a little too close to the sun. To really get this, we've got to look at the Relative Strength Index, or RSI. So if the ADX is the engine's power gauge, think of the RSI as the speedometer. When that speedometer goes above 70, it's like the needle is hitting the red zone. It's a sign the stock is overbought and could be running out of gas. So, Nokia's RSI? It's sitting at a staggering 91.89. The needle isn't just in the red zone here. It's practically broken off the dial. This is a major red flag. It's signaling that this rally is dangerously overextended and a really sharp pullback could be right around the corner. And this right here perfectly illustrates the central conflict for Nokia. I mean, on one hand, you have every single indicator screaming about powerful, undeniable momentum. But on the other hand, you have equally clear signs that the stock is way overextended and at huge risk of just burning out. It's a classic battle between momentum and gravity. So, with these incredibly powerful yet conflicting forces at play, where does the stock go from here? Well, the analyst lays out 3 potential paths it could take. Okay, so here are the 3 possibilities. Path number 1 is the bullish case. If that insane trading volume keeps up, the momentum could just keep carrying the stock higher, maybe to the next key level at $8.51. Path 2, the bearish case. What if those overbought signals win the fight? We could see a pretty sharp reversal, with the price falling to test support around 672, or maybe even lower. And finally, there's the neutral path. The stock could just take a breather, trade sideways for a bit around 745 and just digest these massive gains. So, after weighing all this evidence, all the bullish signs and all the bearish warnings, what's the final verdict? What's the one single thing we should take away from all this analysis? Well, the analyst's conclusion really just sums it up perfectly. It says NOK displays intense bullish momentum, but extreme overbought levels signal high reversal risk. In other words, it's a textbook case of high reward, but it's balanced against equally high risk. And that really leaves us with a critical question, one that goes way beyond just Nokia stock. For any investment in any market, how do you decide? How do you know when that incredibly powerful, exciting momentum crosses the line and just becomes a dangerous risk? That's the key thing to think about here.